For the past 2 days, the governor of the bank, joined by Monetary Policy Committee members, reflected on economic developments here at home, on the continent and globally, and they have come to a decision, an appropriate monetary policy stance for the country for the following 2 months. As usual, the governor of the bank, Mr. Johannes Kabaha, will come here and present the decision and the reasons that motivated that particular decision that they have arrived at. The governor will also entertain questions from our esteemed journalists that have joined us in the room. And in particular, we want to welcome some old faces, people like Francis. It's about to rain, most probably some winter rains, perhaps. But we do welcome you nevertheless, those that have been consistent, like Paula, like Lazarus, but also like Mr. Osiku, and those that are joining for the first time as well. It's good to see some new faces as well. The governor is flanked by Ms. Leonie Dan, our deputy governor, and also Dr. Emma Hayambo, the Director of Research and Financial Sector Development here at the bank. Without any further ado, ladies and gentlemen, joining us on our live streaming platforms on Facebook, but also we are delighted to welcome MPC viewers on television that are joining us for this monetary policy announcement. Governor, sir, the floor is yours.
Thank you, Israel, and good morning and welcome to this briefing. On the 11th and 12th of April 2022, the Monetary Policy Committee of the Bank of Namibia held its bi-monthly meeting and decided to increase the Repo rate by 25 basis points to 4.25%. The MPC cited that this decision is appropriate to safeguard the one-to-one link between the Namibia dollar and the South African rand while meeting the country's international financial obligations. The decision was taken following a review of the global, regional and domestic economic as well as financial developments, mindful of the need to counter the build-up of inflationary pressures in our economy. Let's try and understand why we have actually taken this decision by looking at recent domestic developments. Namibia's real gross domestic product rebounded in 2021 from a contraction recorded in 2020. Domestic inflationary pressures are building up, while growth in private sector credit extension edged higher. The stock of international reserves declined slightly, but remained sufficient to support the currency peg and meet the country's international financial obligations. The real gross domestic product rebounded to 2.4% in 2021, compared to a contraction of 7.9% in 2020. The increase in output was mainly attributed to a recovery in the production of diamonds and uranium, wholesale and retail trade, hotels and restaurants, and transport sectors, coupled with the significantly positive growth registered in other mining and quarrying. More recently, economic activity increased during the first 2 months of 2022, mainly observed in major sectors such as mining, agriculture, transport, tourism, wholesale and retail trade, as well as communication. On the contrary, activity in the construction, manufacturing and electricity generation sectors declined during the same period. Going forward, the domestic economy is expected to grow by around 3% in 2022. Risk to Namibia's economic outlook in the medium term frame, climate swings, global supply chain disruptions, higher oil and food prices, and the possible emergence of new COVID-19 variants coupled with vaccine hesitancy, especially domestically. Domestic inflation pressures are building up. Inflation averaged 4.5% during the first 2 months of 2022, compared to 2.7% in the corresponding period of 2021. The rise in inflation was mainly driven by an increase in transport inflation on account of a rise in international oil prices. On a monthly basis, however, overall inflation declined marginally to 4.5% in February from 4.6% in January 2022. The monthly decline was attributed to lower inflation for transport and food, while housing inflation remained unchanged. From 3.6% registered in 2021, Namibia's overall inflation is now projected to average around 6% for the year 2022, from 4.4% projected at the last MPC meeting. So at the last MPC meeting, we told you the average inflation for this year will be 4.4%. Now we are revising that upwards to 6% for 2022. Although overall inflation remains within a reasonable range, its food and transport components are expected to remain elevated and continue to have a disproportionate effect on the low-income segment of the society, and therefore requires close monitoring. Although still subdued, growth in private sector credit extension increased slightly to 2.8% during the first 2 months of 2022, higher than the 2% registered during the same period in 2021. The marginal rise in private sector credit extension growth was due to increased credit demand by both businesses and individuals. Since the last MPC meeting, year-on-year growth in private sector credit extension increased to 2.8% in February 2022 from 1.2% recorded in December 2021, mainly supported by increased demand by businesses, especially corporates in the fishing and the financial sectors of our economy. As at the 31st of March 2022, the stock of international reserves stood at 40.8 billion Namibian dollars compared to 43 billion Namibian dollars at the end of February 2022. The decline in international reserves was partly due to an increase in international oil prices, which contributed to a rise in Namibia's import bill during this period. At this level, international reserves are estimated to cover 5.5 months of imports and hence remain adequate to protect the peg of the Namibia dollar to the South African rand and meet the country's international financial obligations. Let us look at what's happening in the global and regional economies. The regional gross domestic product of the global economy recovered in the last quarter of 2021. Inflation rates in most monitored advanced economies and emerging market and developing economies continue to increase. Although some central banks have started tightening rates, monetary policy stances generally remain accommodative. Following a solid rebound in 2021 to 5.9% on the back of softening of pandemic-related restrictions, growth in the global economy is now expected to moderate to 4.4% in 2022. For advanced economies and emerging markets and developing economies, real growth is projected to ease to 3.9% and 4.8% in 2022 from 5% and 6.5% in 2021 respectively. The projected slowdown in growth is principally on account of waning base tensions, military conflict, supply constraints, rising debt, and the potential impact of wages on inflation and policy paths. The future cause of the pandemic, the emergence of new COVID-19 variants, and the COVID-19 vaccine hesitancy continue to contribute to uncertainty and pose risk to the global economic recovery. The inflation pressures resulting from increasing energy and food prices may result in the tightening of financial conditions and consequently lead to capital outflows from emerging market and developing economies. This may further cause exchange rate depreciations and resultant bouts of inflation in those countries. Since the last MPC meeting in February 2022, commodity prices continued to increase. All monitored commodity prices, including those of Brent crude oil, uranium, zinc, copper, and gold, increased in March 2022. The increase in commodity prices was mainly as a result of significant supply disruptions following international sanctions that inhibited the Russian supply of oil, gas, and base metals. The performance of the global equity market varied, while bond yields generally increased since the last MPC meeting. Since the last MPC meeting, inflation in most monitored advanced economies and emerging markets and developing economies continued to increase, mainly due to rising energy and food costs, labor shortages, and increasing demand. Inflation in South Africa remained steady during February from the previous month, with the upward pressure coming from food and fuel prices, while other categories moderated. This level of inflation remains above the midpoint of the South African Reserve Bank's target of between 3 and 6%. To mitigate and contain inflationary pressure within manageable levels, most monitored central banks in the advanced economies and emerging and developing economies increased their policy rate at their latest monetary policy meetings, except for the euro area, Japan, China, and India that left the benchmark rates unchanged. Although most monetary central banks tightened the monetary policy stances, overall monetary policy stances remained generally accommodative. Against this background, the MPC decided to increase the Repo rate by 25 basis points to 4.25%. This monetary policy stance is also a step towards normalizing the current negative real interest rate environment and establishing a positive real interest rate that is conducive for long-term economic growth. The decision is appropriate to safeguard the one-to-one link between the Namibia dollar and the South African rand while meeting the country's international financial obligations. Thank you for listening. I'm happy to take questions.
Good morning, Governor. Good morning, Deputy Governor. We have got first question always is how did the committee vote? Whether there was any vote decided to go for an increase or not. Then the second question really talks to the Governor. You said in the statement that the decision was appropriate to safeguard the one-to-one link and also while meeting the country's international financial obligations. I think it's such a broad term. When it's the first time I'm seeing it in the statement, what does that really mean? And you also stated in the statement under point 2 that although inflation remains within reasonable range, its food and transport components are expected to remain elevated. And I think the remedy that you offer there is just monitoring. Because you say and therefore requires close monitoring. I mean, is that all? Because I think considering really that much of Namibian households' income goes directly to those two areas, I think it requires more than just close monitoring. My very last question, you spoke to the key risks under sort of both developing economies and I think also the global space. You listed one of the things there is supply constraint and rising debt. I also just want to know the rising debt aspect, how does that, where does, I think, Namibia sit? Because the last time you said, the last time you spoke to that, I think comprehensively, you said you're not really concerned about the rising debt, as long as it is matched against ideal growth, which we haven't seen. Has your position then changed with regards to that? And then I think one very last question. Yes. Under 7 day, we say the performance of the global equity market very while bond yields generally increased since the last monetary policy meeting. I think we've seen the recent downgrade by Moody's. How is that factoring with the bond performance to date? Probably too early, but so for me, if there's any shift of things, still it's normal. And then I had one last question. Where did I note it? Okay, I'll come back.
My name is Kaila. I'm a freelance journalist. My question is just to find out whether a positive real interest rate will help economic growth.
Right, thank you very much, Lazarus, for the questions, and thank you very much, Kona, for the question. Before I respond to that, let me probably just position 1 or 2 things. A lot has happened since the last MPC meeting. When we last met in February 2022, who would have predicted the current external developments and some of the geopolitical risks that played out? There's a couple of things that has happened. And before I really get to the question, I need to contextualize what has happened so that we have a better understanding what's actually happening in the economy globally and locally that's affecting the decision that we have taken. The first big thing is around COVID. COVID seems to be abating. The WHO, the World Health Organization, has reclassified COVID from a pandemic to an endemic disease. And we can actually see what's happening in our country at this point in time. Since our last meeting, inflation is becoming a serious issue. Pressures are building up locally. Globally, it's actually a big issue. And I'm going to give you more detail about that. Inflation is rising and it's really increasing the cost of living throughout the world, including Namibia. Prices are rising faster than wages, decimating the purchasing power and the spending power of consumers, not in Namibia, but throughout the world. Globally, what we are seeing is there is a deterioration of risk and a re-evaluation of policy choices that's playing out to a large extent. What we need to understand clearly, inflation in Namibia is driven by external factors. It's driven by fuel prices, by supply constraints, by sanctions imposed against Russia, and we, as a country, have very little control over those developments that are taking place. It's externally driven. So the source of the current inflation in Namibia is not caused by domestic factors. The source of inflation that some economists call cost-push inflation is not driven by domestic demand or domestic recovery. We are dealing with imported inflation caused by external factors to a large extent. I hope if we can understand that, then we have a very good basis from which we can all work. To get to Lazarus' questions, how did we vote? Lazarus, we actually don't vote. We normally try and have a consensual approach towards this. In our debate whether we should change, increase, or decrease inflation rates, there were 2 views of colleagues who felt that we need to increase by 50 basis points. instead of 25 basis points. So all policy MPC members felt we need to increase. The only divergence we had this time around was the level of increase. 4 MPC members felt it should be 25 basis points. Let us take a gradual approach, because if you look currently where the consumer is, and you increase rates by 50 basis points, that would be quite hard on the consumer. You know, the question being asked is, why did you then at all increase if you think you are trying to protect and give some relief to them? If we don't do that now, we will be forced, if you look at the way inflation is evolving, prices are building up. So if we don't take a gradual approach and increase inflation of the repo rate by 25 basis points this time around, and we keep it unchanged to give relief measures, what will happen is we'll come way behind the curve, we'll be forced to take big chunks of increases in future, it will come sudden, inflation expectations won't be anchored, it will be totally de-anchored. So that's the reason why we have decided, let us take a gradual approach and increase by 25 basis points to address pressures that are building up. You can see that already what's happening with food prices, fuel prices, and we can expect more in June, July, August, when local authorities start their administered prices. You'll get the new utility bills, and it will also increase. So our mandate as the Bank of Namibia is to ensure we've got price stability, and that's what we are trying to address by the decision that we have taken. What do you mean by safeguarding and protect the link and financial obligations? I don't know whether the question was more on the former or the latter, but I get a sense that to enable us to meet our financial obligations. Lastly, what's happening is we're importing quite a lot of goodies, like oil. Oil is basically priced and sold in hard currency. So even if you have got Namibia dollars, we need to be in a position that we have got hard currency to pay for the imports. If we import some medicine, we have got some obligations in hard currency that we need to pay in hard currency. So the hard currency to make good on. If you talk about financial obligations, we have got some debt that we need to service, and some of that debt is in hard currency. So we are able, through the reserves that we have built up, is a 43, 41 billion figure that we have given you. We are able to pay for the import bills, we are able to pay for debt service that we have got. That's what we are meant with financial obligations. Inflation, reasonable range. So you talk about key risks, we have got supply constraints and rising debt, and you want to talk about rising debts. If you look at whether years, if you probably look historically about debt in Namibia, and I'll ask Dr. Emma to probably give you the high-level fiscal numbers in terms of debt after I'm done with the two questions. When I said I'm not concerned, if you look at where we were last year and the deficit that we have got, versus what the ministers announced over the next 3 years, I'm not as concerned as most people are about our fiscal situation. Our fiscal situation will probably turn out better next year than most people expect. Basically, two things: confidence, and what has happened this year is we've received quite less than what we have expected. We've over-collected in SACU revenues. We are currently being undercompensated, and SACU revenue could surprise on the upside next year. But let's leave it for next year. But I think the outcome on the fiscal side, from a SACU point of view, will be very, very a pleasant surprise. I hope so. Unless there are other shocks to the system that we are not aware. I need to qualify that, because there are so many things that are happening that we didn't know in February that we're going to go in Europe. Now we have got that. So Lazarus, please don't hold me next year if you come back and say, but you said, all things being equal, and there are not big shocks, we think next year is going to be. So that's on the SACU side. The other side is, I think, the confidence. I'm asking the question, are our stars aligning? And if you talk about green hydrogen, if you talk about the oil discoveries that we have got, if you look at the new mines, particularly the uranium mines that are opening, there are a couple of uranium mines that are just waiting for the price to get to about $60 US, because their break even, I understand, is anything between 45 and 55, and it becomes quite profitable. We have seen in the papers, we've written about Alatin, one of the new uranium mines that are opening. So there are some discoveries also in the minerals. The extractive sector seem to come up with some interesting news for the country, whether it's a gold mine, people are talking about a new gold mine around Repo. So the confidence in the country is probably going to help us over the next year and beyond to turn the corner from a SACU point of view, from the extractive sector, and the outlook for the diamond market is quite good. So that's why we are saying we expect the economy to grow about 3% in 2022. Right, Kona, if I get to you around positive real interest, what do I mean by that? Let me first say that if you have got inflation of 4.5%, and you have got a repo rate of 4% before this increase, right? So you have got inflation at 4.5%, and you have got a repo at 4%. So if you go and take your savings to the bank, you receive on average a 4% interest on your savings. But the inflation is 4.5%, so the real interest rates are negative. So for the people that are saving, particularly our pensioners, there's no incentive to save. So now, with positive interest rates, there is some capital formation that's happening. People are saving. The savings can be used for investing in the economy. So it's good for economic growth. So that's what I'm saying. It's good for economic growth if we have got people there's an incentive to save, and that savings can be utilized for investments and for other purposes. I hope I've covered the ground.
Governor, the downgrade, I think.
Oh, the downgrade. So the ratings agencies are raising issues we are aware of. The concerns they raised last year were our debt sustainability. They were talking about increase in our debt, which weakens our absorption capacity. They were talking about rollover risk. They were talking about low average maturity of debt and the poor growth outlook. Overall, they were concluding that the fundamentals have not materially changed the country. So for me, the big thing is just they are concerned about that, but what they have done that many people are missing is they have actually lifted the outlook to stable from negative. And many people are only just looking at the downgrade, but there was another element in that. And the issues that were raised were not new to us. The fiscal situation will change next year, and I have sort of talked about SACU, I've talked about green hydrogen, I've talked about, we're not going to see something from oil discoveries, just the mere confidence. If you really want to stimulate the economy, the biggest thing you can do is actually just build confidence. We need to change the narrative. We need to change our own story that we are writing in this country. And that's going to be very good for our economy. So I personally think that next year and beyond should actually be a better year for the country in terms of the outlook. But I'm not surprised by the issues they're raising. We are aware of that.
So in a layman's term, what does the increase in the repo rate means to an ordinary Namibian?
My name is Patrick Kumalo from One Africa TV. I would like to ask, what are the limits of the monetary policy in terms of economic growth?
What are
the limits of the monetary policy when it comes to economic growth?
Good question. Thank you so much.
My name is Frank. I think for me, I'm just trying to understand, Mr. Governor, because your point is next year, when this question of economy is coming up, and you seem to say the confidence and the hope of the Namibian must wait next year. And it doesn't really speak to the current challenge that the country is facing in terms of economic confidence and what all this monetary announcement would trigger in terms of confidence. I think the idea of next year doesn't really augur well for me to appreciate the pronouncement the bank is doing today. Thank you.
Thank you, Franz. Your activism is well noted.
I know Governor, you spoke to, you don't want Namibia to stay behind the curve. But I think at one point we were, that was last year if I'm not mistaken, 3.75, I think, and then next day was at 4%. Then, because one of the key, sort of one of the things that I raise is always, at least a key one, is always a capital flow to where interest rates are somewhat high. Is this possibly also why sort of the committee decided to increase the rate now? And if it is, what was it then like during that December period where, I'm not so sure if it's December now, where we were behind? Was that, did we also see massive or alarming capital outflow to say where interest rates were better? Thanks.
Good. That's it. Last one, Governor. Tina from Facebook is asking, what measures has the Bank of Namibia put in place to contain the current inflation in the country, and what is the bank doing loans with commercial banks? I think then that covers all of the viewers that are watching at home, and also our esteemed journalists. Governor Wood.
So let me start with the last question, and what is that we are doing to contain inflation? Exactly the decision that we have taken today to increase the repo rate by 25 basis points is a tool that we are using to make sure that we get price stability, that the prices don't run out of control, and we also try to look at expectations around that. So that's what we are doing in terms of trying to manage inflation. That's the tool that we have got, given the fixed exchange arrangement that we have got. The high interest rates, I'd really love to appeal to the local banks in terms of the spread that we have got in the country. I think as the Bank of Namibia, we've got the responsibility on the one hand to promote monetary stability. On the other hand, we've got the responsibility to ensure that our financial system is as stable as it is. But what is happening currently is I want to appeal to the local commercial banks, because if you look at the spread is currently at 375 basis points. And that can be reduced to about 3.5 or 350 basis points. So what the spread is, we have said currently the interest rate is 4%, right? Or the repo rate is 4%. And the prime lending rate is 7.75%. So the difference between the repo rate and the prime lending rate of Namibia is currently 3.75%. I'd really love the central commercial banks in the country to seriously consider to reduce the spread from 3.75 to at least 3.5, because it's going to help consumers. But I cannot force commercial banks to do that, because we have the financial stability obligation. But if you look at the spread, the policy rate and the rate at which commercial banks are lending in other countries, that spread in Botswana is 2%. That spread in Nigeria is 2%. That spread in South Africa is 3.5%. That spread in Namibia is 3.75%. So if we can come down to 3.5%, we will help. These are difficult times, and any effort to assist the consumer will be really welcome. So it's a call upon our commercial banks to seriously consider reducing the spread to 3.5%. What does it mean, this increase for the man on the street, Seliman? So what it simply means is the cost of borrowing is going to increase. If you currently have got a home loan, a car loan, or an overdraft with the banks, it's going to increase by about 25 bips if you don't have any other issues. So that's what it is. If you need exact figures, I'll ask Dr. Emma to give you that figure. What does it mean for a home loan of 1 million increase to 25? If that's what you want to understand, we must give you that figure. If you don't have it, Dr. Emma, we'll probably have to do it after the meeting. But what it means is the cost of borrowing is increasing. If you have got loans with banks, that loans are going to be more expensive. And the cost of basic consumer goods will also increase in the country. You'll see that. Have we covered what's the, you're only talking about next year and not about this year. We as the Bank of Namibia have got the responsibility to look at monetary and financial stability. Many people are expecting the Bank of Namibia to grow the economy. Yes, we have got the responsibility that monetary stability and financial stability are not an end in itself. It's a means to an end, and that end is sustainable economic development of the country. But our core responsibility, Francis, is to make sure that we have got price stability. We should make sure that you are able to buy with your money what you are able to buy. You know what has happened during the crisis like this, where you've got oil prices running out of hand like we have got. We also have got unscrupulous business people that are taking advantage of this. You just know how much we paid for masks and for sanitizers in the beginning. And most of the time when we have got this petrol, we run a simulation. We just look at, and I probably need to give you that one, if I get my figures somewhere here. We ran a simulation on the most probable scenario and look at what's going to happen if you look at the fuel price. There are two things that are quite important. They are priced in US dollars, and the second thing is exchange rate. So we ran a simulation to see what's going to happen if the fuel price is going to be between 100 US dollars, I'm talking about Brent crude price, 100 and 130 US dollars. And we said, well, let's assume that's the price. And we assume the Namibian dollar to the US dollar exchange is going to be between 15 and 15.50. If that is the case, we ran and we said the price of petrol should be about between 18 and 22 roughly in Balfeswar, the landed price. In Shakati and Mansour and Katima, it will be totally different, much higher than that. But it's not a pricing issue that you'll see there. You see some unscrupulous business people that are taking advantage of the situation and go and overcharge some of the things. So we need to call them out from time to time. I think I have dealt with the issues that were raised. What's the limits of monetary policy? Exactly what I've said. We cannot use monetary policy to directly grow the economy. You know, what we need to make sure is we have got price stability, we've got a stable financial system, and that could be the platforms for the economy to grow. So we cannot get monetary policy to do things that other people expect us to deliver.
Governor, if you can maybe please explain how positive real rate will drive economic growth.
Positive real rate, how it will help economic growth. What I mean by that is currently we've got an inflation of 4.5%. And any rate above 4.5% is a positive rate. So if currently there's no incentive for me to take my money to the bank because the savings that I have got, the return that I'm getting on my savings are eaten away by inflation. So there is actually not quite an incentive for me to go and put money into a bank. If, however, I'm getting inflation-beating returns on my savings, many people will have the incentive to save. And if people have got money to save, there's quite a lot of money that's available in the system that can be used for investments. So people can start investing in factories. People can start investing in productive assets to create jobs, to start new businesses. That's what I meant by a positive interest rate is good for economic growth over the long term.
Excellent. Thank you so much, Governor, for that comprehensive response to all of the questions. I'm sure all of the questions have been exhausted. Lazarus, I see you are still itching. We will accommodate one or two side questions if you have additional queries to make. We have also seen Enya's and Willa's questions on our Facebook regarding the spread. We will be sure to attend to those as well. And that brings us to the end of this session.